Was there insider trading going on during the wild stock market swings this week? Well, just ask Marjorie Taylor Greene. Let's discuss. I'm Dave Aronberg, former state attorney for Palm Beach County, aka the Florida lawman here on Legal AF. So if you have a 401k, if you own stocks, you have seen some crazy swings in the market, and most of it is really bad because it's going down. It's been sinking. Trump's tariffs have been sinking the markets, and there have been bumps and dead cat bounces here and there, but there have also been people who've been taking advantage of the wild swings. And one of them seems to be Marjorie Taylor Greene, poster child for MAGA. According to Mediaite, Representative Marjorie Taylor Greene reportedly made a series of bold stock buys last week, right as the markets cratered under President Donald Trump's tariff threats. Greene, a vocal MAGA diehard, pounced on some of the market's worst hit companies, according to a newly filed financial disclosure seen by CBS News. Among her targets, Dell, Amazon, Lululemon, and RH, formerly Restoration Hardware, all of which were down nearly 40% when she bought in. It's unclear how much Greene spent, since the required 3-page report only offers ranges, but the timing is working out so far, according to CBS News. So it must be nice, huh? You rail against the predatory globalists, and then at the same time you're investing in those same globalist companies, and you're doing so right during the dips of the market before it jumps. I wonder if you get out afterwards. See, in Congress, you have to do these disclosure forms, but the disclosure forms only tell you so much. You have to give ranges. You don't have to give exact numbers. Again, must be nice. According to Mediaite, RH, her standout winner, soared more than 30% after Trump abruptly paused most tariffs on countries outside China for 90 days on Wednesday. That move temporarily lit a fire under the distress and depressed markets, though the bounce was short-lived. The S&P 500 gave back much of Wednesday's gains in Thursday's sell-off, closing down 3.5%. RH dropped more than 10% Thursday, but remained above the price Greene paid. Dell, which had lost more than half its value, has rebounded 9% since Greene's purchase. Hours before easing the tariffs, Trump told his supporters on Truth Social, with all caps, "This is a great time to buy." Okay. Now, some would say that could be insider trading, but if you do announce that on social media to the world, it's not really inside information if you act on it. But if you get other information personally from the individual that tells you that something is going on, so that things are changing, then yeah, that could be an SEC violation. Now, we don't know exactly what happened here, but the timing is curious. And if you're wondering whether the SEC is going to investigate, the SEC is under the executive branch. So don't expect an SEC investigation anytime soon on this matter. According to Mediaite, Greene said in a statement to the Associated Press that, quote, "I have signed a fiduciary agreement to allow my financial advisor to control my investments." So she's saying she's not the one who did it. She's saying all of my investments are reported with full transparency, and that's her investment advisor. And there's no evidence that Greene traded on non-public information, which would constitute insider trading. However, the timing of Trump's tariff announcement, paired with his recurring calls for supporters to, quote, "buy the dip," has sparked criticism from opposition lawmakers. Here's a clip of AOC calling out those in MAGA world who decided to take advantage of perhaps inside information. Check this out.
Trump seems to be doing, from tweeting people to buy stock and then later announcing his development on taxes. If people are pissed about insider trading here at the House, look at what's happening at the White House right now and with the Republican Party.
Do you think he knew what he was doing when he sent out that message about stocks before he made the announcement?
It sure seemed like he did. I don't think that it was a coincidence. I don't think that Trump just coincidentally said buy stocks and then shortly later made an announcement that dramatically inflated and dramatically raised a lot of these asset prices. And, I've heard murmurings on the floor that there may have been people that knew that this was coming. And I'm very interested in seeing some of the stock disclosures that come out when those reports are due. And I'm very interested in what members of Congress have been buying and trading stocks in the last 24 hours prior to this tariff announcement.
It's interesting. There have been murmurings on the floor. Well, I hope that Congress, and it's going to have to wait until there's new leadership at the Congress, but I hope they would tighten up some of the reporting rules that allow a lot of this to keep going on, with the public having no idea about if their members of Congress or elected officials are acting under inside information, because the disclosures are still too vague. And we're seeing some questionable activity with some of these trades going on with these wild market swings. And, it's really tough to track down how these people found out the information. Remember, Martha Stewart was convicted because she allegedly traded on inside information, but she wasn't convicted on that. She was convicted of lying to the FBI. That's something you don't want to do. It's much easier to charge someone with lying to the FBI, and then that's a prison sentence, as compared to trading on inside information, because then you can have a wide variety. You can say, no, I didn't trade on that. I traded on the president's tweet. But it's not just AOC. There's also a group of 19 House Democrats led by Congresswoman Maxine Waters, who's the top Democrat on the House Financial Services Committee, who sent a letter to the chair of the SEC, Paul Atkins, requesting an investigation into possible insider trading and market manipulation. The letter, as you'll see here, says the following. One such trading activity occurred approximately 10 minutes prior to the president's Truth Social post announcing that most of his previously announced tariffs were being delayed by 90 days. Trading records show a precipitous spike in purchases of call options, which allow an investor to place a bet that the price of a stock will increase during the 10-minute window leading up to the announcement. No rational investor would have purchased these options unless they had prior knowledge of the president's impending reversal on tariff policy, as the volume in calls at that time showed the vast majority of bets were in the opposite direction. Following the announcement, the S&P index soared 9.5%, its biggest single day gain since 2008, and the Nasdaq Composite rose a staggering 12.2%, which was its second biggest gain over 2 decades. Additionally, shares of the president's family's company, Trump Media and Technology Group, which has the stock symbol DJT, rose 21% following a post in which the president instructed his followers, this is a great time to buy DJT. These incidents occurred after a chaotic week of volatile market swings and a more than 10% drop in the S&P 500 index, the largest 3-day drop since World War II, all apparently caused by the president's April 2nd, 2025 implementation of sweeping across-the-board tariffs. So the reason why they're focusing on call options is because that's a very fast way to use leverage to make a lot of money really quickly. And if the markets are going down, it's suspicious when people are putting all their money into call options. One of the advantages of call options is that you can make a lot of money real fast using much less capital than having to buy the stock outright. On the other hand, call options are a depreciating asset. Normally, there's a time cost, and it's like sand in an hourglass. Every minute, the intrinsic value of the call option will decrease because of the time value. It's an asset that runs out of time. You have a limit, unlike stocks, which you can own forever. And so you only are buying call options if you believe the stock is going to go up and go up quickly. That's why these members of Congress wrote this letter to say, hey, there must be some market manipulation here. Now, whether the SEC chair will act, well, you know my skepticism on that. So that's part of the trouble in the law. There's a lack of disclosure for members of Congress, and then the laws make it tough to actually convict someone of insider trading, but it's much easier to convict them of lying, which is why there should be tougher rules and why we perhaps need an investigation into some of this activity. The investigation, when you shine a light onto things, can root out a lot of the rats that are taking advantage of the system. I don't know if that's a mixed metaphor, but I'll go with it. So that's the latest when it comes to the wild market swings. When it comes to alleged insider trading, we'll keep following it here on Legal AF. I'm Dave Aronberg, aka the Florida Lawman. If you like this video, please like, subscribe, share with a friend, leave a comment below. Thank you for all your support, and we'll see you next time.
In collaboration with the Midas Touch Network, we just launched the Legal AF YouTube channel. Help us build this pro-democracy channel where I'll be curating the top stories at the intersection of law and politics. Go to YouTube now and free subscribe at Legal AF MTN. That's at Legal AF MTN.